But as far as, what are the telltale signs of a great investment? One thing that I talk about, and now it's kind of more prevalent than ever, here we are post-COVID, interest rates have been going up, downward pressure on pricing, certainly a lot of distress out there, certainly more to come. Seller's motivation is really one of the number one things to look for when buying a property. So if you're buying a property and you do not know why the owner is selling, you're at a big disadvantage.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Our guest today has a lot of experience as a broker, and not too many people on the show can say they've sold properties and loans totaling over $5 billion. His name is James Nelson. He's a principal and head of Avis Young's Tri-State Investment Sales Group in New York City. Over 25 years in his career, and a serial real estate investor, has launched 2 real estate funds, total capitalization of $350 million plus. He's passionate about helping others achieve real estate success. He does lots of training. He has a podcast called The Insider's Edge to Real Estate Investing. Also a book called The Insider's Edge to Real Estate Investing, which you're going to hear us talk about through the podcast today, or the interview. But a number of things that he says these things like they're common knowledge, right? He's been in the business so long. A number of these things I wish I had known years ago, right? That you're going to hear him mention, and I know you're going to learn a lot from James today. James, welcome to the show. Honored to have you on, and I'm looking forward to diving into your expertise. Man, you've been in this industry for 25 years and have done a lot. I think your bio said sold properties and loans totaling over $5 billion. There's not too many people that can say that. So grateful to have you on. Welcome.
Thanks so much, Whitney, and real pleasure to be here with you. And I had the privilege of having you on my podcast, and just really appreciate what you are doing for the community. And I think it's really powerful, the mission of your work too, and how you give back.
Oh, thank you. Appreciate that very much. And grateful that you remember that. Let's dive in. I guess give the listeners a little more about who you are and a little bit of your path, right? Getting into real estate and, 25 years now, maybe your focus now, and then we'll dive into a few specific things that I know are going to be very beneficial to the listener.
Sure. So I'm an investment sales broker at Avis Young. I've been doing this for, as you said, close to 25 years now. And I was an English major at Colgate University. I didn't even know real estate was a thing my senior spring, and then got this opportunity where one of the founding partners of a firm called Massey Knackle happened to be a Colgate alum. So I saw this job posting and took a shot, started off as a sales associate. When I started with that company, there was only 20 people there. Fast forward 17 years later, I was a partner, company with 250 people. We were selling 4 times the amount of properties as the next brokerage firm in New York City. We sold it to Cushman and Wakefield. I had 3 great years there, and then had an incredible opportunity to build out the investment sales platform here at Avis Young. And so we handle the sale of all different types of properties, multifamily, retail, office development, throughout the New York area. And then my big passion is really, giving back and teaching, and just completed the book, The Insider's Edge to Real Estate Investing, which I know we're going to get into today on the show. So would love to share some of the lessons with your audience.
Yeah, I would love to do that. I'm looking forward to just learning from you, myself, and for the listeners as well. Let's jump into that a little bit. And you said the insider's edge. To real estate investing, I think we all want the insider's edge, right? And especially everybody listening are either typically passive investors or they're operators, one or the other. And so no doubt this is going to be really good for them. And I know one thing you addressed, we're going to go through a number of things, but why real estate is better than the stock market. And I think we've heard lots of different things over the years, right? About one way or the other, depending on maybe the way we were raised. We might think real estate's crazy and we just need to put it all in the stock market, or maybe we, depending on maybe when you were born or who your parents were, you may think the opposite. But help us understand that a little bit.
Sure thing. And Whitney, I should clarify, I wrote this book for anyone who's looking to get into real estate investing, whether that's as a general partner or whether that's as a limited partner investing in great syndication platforms like yours. But the idea is, yes, you can gain the inside edge to real estate investing. And that's why I really prefer real estate investing over stocks and bonds. You know, investing in the stock market, everybody has access to the same information. There's no way to get an inside edge. And if you do, you can actually go to jail for it. So whereas with real estate, the information is not perfect. It's actually a very inefficient marketplace. I learned that very early on in my career when I would see two buildings sell for on the same block, and one would go for 20, 30% more because it was properly marketed, right, by a broker, where the other one sold off market at a reduced price. There's inefficiencies like that you can take advantage of. And also a big theme of the book really is who you work with, working with experts, understanding how to unlock property value so you can outperform the market.
Yeah. Yeah. Any more thoughts on the, you know, there's so much focus on the stock market, and I just hear it still often from so many. Right? Well, we got to keep a little over there versus real estate, or I'm not so sure about real estate. I don't know. Just any other myths that maybe you combat or think about as I hear it all the time. It's like especially from family members who are still skeptical of real estate, but just thinking through stock market, and why real estate is better.
It's a great question. And I mean, I first start by saying that I think a lot of the reason why people do not invest in real estate is because they just don't feel like they have access. If you're not from a real estate family, or if you don't have experience, besides owning your own home, it could seem very foreign, and trying to understand how things work. And, frankly, it's very difficult. The business, the way most people learn is by doing it. And that's certainly how I learned the business. And I learned to invest along the way and had great mentors. But I really struggled over the years to find great resources. And, people would always ask me, James, what's the book? How do I learn how to do this? And I couldn't point them to a book. So finally I said, I've got to write the book. So, I really hope if your audience reads my book, they would have an understanding of how this all works, and how to get into it, and how different ways you can get. Again, you don't just have to be that developer operator who's taking down the whole property for yourself. You can be a limited partner and have exposure to real estate. So I think just understanding how it all works, then figuring out what capacity you would like to play in. And I think, general investing advice is to invest in things that with people who you know and trust. I think that's a big part of it. So I think once you can understand how this works, get to know the players, get a comfort level, you're really ahead of the game.
For you, and maybe this would be something out of your book too, I'm sure. But as an investor, what are some of the things, or number one thing to look for that makes a great deal for you? If we're considering investing in real estate.
First of all, it is a numbers game where you have to look at a lot of opportunities, right? And as a broker, I see this all the time. I mean, I can make 100 phone calls and maybe only one person is actually interested in doing something, buying or selling. So I think there is a numbers game, and I think there's something to be said of, you do need to pick an area to specialize in. That could be geography, it could be a product type, it could be both. So assuming you've figured out what your interest is and are able to study that market and really understand values, then you can start to analyze and look for great opportunities, right? And so a lot of my book talks about how to go about doing that, and kind of the pros and cons of the different types of asset classes, because I think part of it also is you have to recognize what type of time you have to devote to this. But once you have that area of specialty and become the expert. When I started in the brokerage business, before I could pick up the phone, we had a territory system. So each of us had to know a neighborhood. And I couldn't make any calls until I spent 3 months studying this neighborhood, the Chelsea area of Manhattan. By the time I was done, I knew every single owner. I knew who the buyers were. I knew what the zoning was. I knew what apartments were renting for, what retail leases were. And even though I'd go up against brokers who had been doing this for decades, they knew a lot more about brokerage. When it came to market knowledge, I could run circles around them. So I would tell your audience, if you have a thesis, if you like an area and you really study it and understand, where properties are trading for, you'll even though you might not have the long time investment experience, you can really start to understand values and what to look for. But as far as, what are the telltale signs of a great investment? One thing that I talk about, and now it's kind of more prevalent than ever, here we are post COVID, interest rates have been going up, downward pressure on pricing. Certainly a lot of distress out there, certainly more to come. Seller's motivation is really one of the number one things to look for when buying a property. So if you're buying a property and you do not know why the owner is selling, you're at a big disadvantage. If the broker tells you, well, this owner, they don't have to sell, unless they get a number like $10 million, they're not going to sell. That's probably not the person you want to buy from. But estate sales, and not saying that all estates necessarily mean they're going to sell at a discounted price, partnership disputes, distress, and there's all different types of distress that we can get into. Knowing that the seller has a reason to sell is really important, because that seller should be willing and hopefully able to meet the market to trade it at a good price. Whereas if you're dealing with a discretionary seller who doesn't have to sell, generally you're going to end up overpaying for that property.
Maybe give us a tip, as far as when we're working with someone like yourself to find out that information. I think most sellers want you to think they don't have to sell, even if they do, right? But just working through that conversation a little bit with the broker or seller, maybe a tip or two there.
It's, Whitney, it's a great question, because, brokers are generally, their job, if they're representing the owner,
Right.
is to protect them, to sell the property at the highest price. So if they're under financial distress, they're probably not going to volunteer that information, but there is research that you can do on your own. So if you're buying property in most markets in New York, there's open source data, there's platforms like Reonomy, Property Shark, where you can go and find the debt on the property. So if you see an asking price of, $8 million and they owe $8 million on the property, you're probably not speaking to the right person, because that owner probably does not have the ability to transact. So I think understanding what type of debt do they have on the property, you can even look when that loan was originated. You're not going to know necessarily when it's coming due, but a lot of these community banks, they're 5-year loans. So, I was actually having a talk with our sales force, because as brokers too, we try to look for where are the opportunities, and we talk about what were the vintage of loans they're going to create the biggest opportunities. So if you think about those loans that were originated in 2019 from these community banks that are likely coming due in 24, even like the 2018 originated loans, they're going to be coming to a decision where they have to refinance or they have to sell. And it's not just that interest rates are going up. What that's doing is putting, instead of the days of cash out refis, which is how a lot of investors made their money, they buy a property, increase the rents, refinance, take the loan proceeds out of the property, go buy another property. Now it's the opposite. Most of these banks have become a lot more conservative. So in many cases, they're looking to pay down the loans. And so finding that situation where you have an owner who's got a loan coming due, and let's say they have equity in the property, but they don't have the ability to pay down the loan, that's, a good way to look for it. But, asking the broker why someone's selling, it'll be interesting to hear what they say. And sometimes they will volunteer it's an estate. Look, they're looking to retire. And sometimes these clues can help you create a win-win. Okay. It doesn't have to be a predatory question where, I'm going to take advantage of the situation. If you have the broker says, well, this owner, they're tired of managing, these 20 units. They'd rather get into something, a triple net property where they can just clip coupons. You might say, well, look, what about a flexible closing? What if you gave me more time to close the property? That gives you more time to find an exchange property where you can actually find a win-win.
Love that. I agree. It's like putting a puzzle together, right? But all the pieces aren't right in front of you. You got to go looking a little bit through some other puzzle boxes to find the pieces, and there's clues that let you know the motivation. I think it's great advice. I know so many listening, and I often ask this on the show, almost of every guest, but I would love to hear your thoughts too. But is now the time to buy? Right? It's such a challenging market. Right now, it seems for most that I talk to, obviously with interest rates, it's a challenging time to buy. But is now the time? What are your thoughts?
Well, if you subscribe to the Warren Buffett theory of investing, the answer is yes, because, and I'll probably mess up the quote, but something to the effect of is be fearful when those are greedy and greedy when those are fearful. And what's happened over the last 6 months is, yeah, you do have a lot of fear out there, and sales volume has dropped tremendously because there's so many buyers on the sidelines. So let's go back to that point I was making about motivated sellers. Is this the best time to sell a property? No. If you can wait, rates stabilize, hopefully the markets continue to come back. But a lot of owners are not in this position where they can wait, right? And so if you are a buyer who's just sitting there on the sidelines, it's kind of like at the poker table where the dealers don't let you jump in and out. You can't kind of say, all right, I'm going to just stand on the sidelines. I'm going to wait until everything looks great, and then I'm going to jump back in and expect to pick it up right where you left off. You will have lost your broker contacts, opportunities, and you'll have a lot more competition. So yeah, there's a lot of challenges right now, and it's difficult to get deals done. It's difficult to get them financed, but if you find that seller with the right motive,
no doubt, it's finding that seller with the right motivation. I guess most of your clients right now, would you say where deal flow is happening right now? Is it a specific asset class more than one or the other? What are you seeing right now?
yeah, I mean, the occupied multifamily is still performing very well. I mean, in New York, and it is important for your listeners as they're thinking about where they might want to invest, you have to understand the landscape, where you're going. New York has rent regulation for about a third of our apartments. Let's put those on the side because that's a whole different proposition. We used to have the ability where you could take a rent regulated apartment and decontrol it and charge a market rent. That's no longer possible. So let's, our interest right now is focused on those fair market units where you can go in and renovate them and increase the rents. And because a third of our inventory is frozen in rent regulation, what that has done is put more pressure and more demand on the fair market units. And so we're seeing, even though the cap rates have expanded, meaning investors are looking for higher returns because it's more expensive for them to borrow money, there's two levers in valuing a property. One is what's the return you're looking for, and what's the bottom line that you are basing that off of. And so even though investors are demanding higher returns today, the bottom line of these multifamily deals are still poised for incredible growth. And so we're seeing a lot of traction there. We're also surprisingly seeing a lot of interest for retail. And again, I wouldn't make that a broad statement across the country. I just came back from LA, and it's tough. You still see a ton of for rent signs, a lot of vacancy. New York is full. We are busy. Tourism is back. That being said, only half the people are going back to the office. So if we're talking about demand for office buildings, we'd have a very separate conversation. The big question now is how do you convert office to residential, other uses? But the majority of our demand is for multifamily or mixed use with retail.
Yeah. Yeah. What about how have you seen maybe different teams built to capitalize on the right investments, right? Or tips for building the right team? I know you've worked with a ton of different operators. You've built teams, as well, and I know you're going to have some advice there before we move to a few final questions.
Absolutely. So the first podcast interview I ever did was with Bruce Ratner, prolific developer. He's built over 50 projects here in New York, including the Barclays Arena. He's part owner of the Nets, or was. And I asked him throughout the interview, how did you do it? How did you build your team? Or how did you build this incredible portfolio? And he said the word people, teamwork. I went back and he said it close to 50 times in an hour-long interview. This business is about the people. It's about the specialists. So it's really important when you go into a market to a specialty to have the right team members in place. So don't just go to your family's generalist attorney who did your trust in a state. If you're buying multifamily, you want a transactional real estate attorney who specializes in multifamily. And if there's questions about the tenancy, you might even need a specialist, a landlord tenant attorney, to make sure that the leases are done properly. So the better your team is, the better you can understand these assets and unlock the potential. So it's really important that you think about who are the team members to have as you go to look and buy properties. That's one of the first chapters in my book. So in addition to having the right attorney, having great investment sale brokers you work with, a mortgage broker in this landscape, a lot of these lenders are on the sidelines. So where is debt coming from today? Certainly if you're going to undertake a renovation project, an architect, a contractor, assuming you're not going to self-manage it, having a good managing agent. So, but having the right team in place makes all the difference.
Yeah, I love that. This meeting or this business is about the people. No doubt about it. I was talking to a lady yesterday. We're talking about hiring and whatnot, and it's just interesting as you grow. Early on, right, an entrepreneurial, business career, it's like you're doing everything, right? You feel like you're doing everything, but then as you grow and you start hiring people, you start finding people that are much better than you are about at a number of things, right? And man, just couldn't do it without them. It's interesting, but even the team of attorneys and brokers, like you're talking about, it's just crucial. It's just crucial that you find the right people and build a team. James, we're gonna have to move to a few final questions, and but I would love to know as well. I know we talked about just the challenging market, right? And it is now the time to buy, in the Warren Buffett quote, no doubt. But we still like to know, just from your experience, any predictions you have for the next 6, 12 months, 18 months. And what I normally say is that I know none of us have a crystal ball. However, what we think is going to happen affects what we're doing now, right? Buying, selling. But just wonder, your thoughts. You're working with so many operators and buyers and sellers. But I don't know, any thoughts, opinions over the next 6, 12, 18 months for you?
Yeah, I think we're going to see some of the best buying opportunities that we've seen in at least a decade. This situation of owners who have loans coming due. I mean, think of it. Anyone who has debt, generally they're putting 5-year debt on the table. And this is what is going on. It's not just, again, the rising interest rates, with these bank failures, with regulators really clamping down on these banks. It's going to create a lot of challenges. And it's, again, it's not the distress per se where a lot of these owners are upside down, where they owe the bank more than the property's worth. The issue is, maybe 5 years ago when they were financing the property, they thought they were getting conservative leverage when they took on 65% leverage. But now they're going back to the bank, and the bank is saying that you can refinance, but you have to pay down the loan. And again, this isn't just people who bought properties over the last couple of years. We have a client right now, a family, they've owned the property for over 40 years and they're in this situation. So, and otherwise they would have never sold this property. So for those of you out there, you're going to see opportunities that we haven't seen in a long time, because there's going to be a lot of situations where owners are forced to sell. And so as a result, I think there's going to be a huge uptick in sales volume. Now, since June, once rates started going up, again, a lot of buyers were on the sidelines because they said, I don't know where pricing is going to go. If rates just keep going up and up and up, there's going to be more and more downward pressure on pricing. So I'm going to wait, right? So now it looks like that's finally flattened out. So we kind of have a sense of what we're dealing with. But this next wave is really going to have to deal with a massive deleveraging that's going to have to take place across the country and most likely around the world.
What would you say is your best advice for passive investors right now?
I think it is all about knowing the sponsor and doing business with people who you trust. I look at the investments I make as a limited partner, and I'm more interested in who I'm investing with and what I'm investing in. And that might sound, I'm not saying don't look at the business plan, don't feel comfortable with it, but it is so critical to know and trust who you're dealing with, because it's the don't bet on the horse, bet on the jockey. I think that's really important.
Yeah. What are some of the most important metrics that you track? Could be personally or professionally.
I mean, sometimes the challenge is we track too much. I mean, having a sales team of close to 3 dozen people. I mean, the metrics we track are insane. As far as knowing what our pipeline looks like, how many properties are we valuing, listing, selling, conversion rates, calls that we're making, outreach. And so I really had to, you know, dial it back in the sense. I don't know if you're a fan of, or Gino Wickman's book
Oh
Traction,
yeah.
and and I actually didn't realize that his concept of the rocks came from Stephen Covey. So and there's if you search for this video, Stephen Covey rocks, he's got someone up on stage and they've got all these pebbles and then these giant rocks, and he says, okay, fit it all in this bucket, and you can't do it, right? You can't do it all. So maybe at the risk of ruining the end of the movie, the right way to do it was pour out all the pebbles, start with the rocks, and then you can fill it in with the pebbles, but get rid of the stuff that's not critical and really focus. And so now, as I think of quarterly goals, what are the 3 objectives that I have to accomplish? And goals have to be quantifiable. So you can't have a goal if you don't know if there's a start and an end. So, and I found this really works well with the team as well, because if we all know kind of what is our focus, then it stops me from asking my operations manager about 40 other things during the week. He says, James, I got it. It's on the list. It's not a priority this quarter. So I think it just gets everybody focused on the big picture.
Love that. Now, we've talked about traction and EOS a number of times on the show, and about rocks and how we do rocks as well, in a system very similar to traction and EOS at LifeBridge. And so the audience should be very familiar with what you're talking about. But I'm going to look that video up. Maybe we can post in the show notes as well. I appreciate that. What about some habits, James, that you are disciplined about that have produced the highest return for you?
I'm a crazy morning person. I wasn't always that way. I can't say that I love getting out of bed early, but 4:45, I'm up, so I can get my workout in first thing in the day, clear my head, and then I'm on that, train at 6:30, and 6:30 starts, my workday begins, and that way I've cleared all my emails and get all my stuff out of the way, meeting with teams. So 9 o'clock rolls around, and I'm ready to hit the phones and be productive. So I find that if you don't have that time, for yourself to really get your house in order, it's really hard to be productive throughout the day, because during the day, my schedule's jam packed and I'm running from this place to the other. So for me, it's just, really being disciplined about that morning time to get things in order to be most successful for the day.
I can relate to that completely. It's like you're building your foundation for your day by having that time in the morning. And what would you say is the number one thing that's contributed to your success?
I think it's just consistency, especially in the brokerage business. And I've been doing this now where I've seen, 3 major downturns in the market. And, I've noticed that along the way, a lot of the competitors end up just kind of falling by the wayside and taking their foot off the accelerator. I think you need to continue to keep showing up and doing the right things, because you never know when things are going to turn. I think it's just, that drive. I think the other thing is, I really enjoy learning every day, and I'm passionate about the business. If I didn't enjoy doing this, maybe I wouldn't be hopping on the train every morning at 6:30. But I do love what I'm doing, and I love sharing knowledge and helping others become successful. So I think that also keeps me going.
How do you like to give back?
Yeah, I think the book was a big part of it, as was the podcast. In fact, I have a student with me in my office today who's shadowing, and we open up our office and bring in students. And I think, real estate is such an exciting world, and yet so many people just don't know about it. And if they don't have family or know people who are involved, they don't know how to get involved. And so I think just, to put the word out there and put out great content and help others, find out about all the opportunities in this space. I'm certainly really passionate about that. I'm also on some charitable boards as well that help support at-risk kids here in the city. So I think it's certainly really important to give back to the communities you serve as well.
Awesome. James, you've definitely given back to us today. I'm grateful to have had you on the show and just to get your insights on real estate versus the stock market and things to look for and finding that real estate deal. Some crucial tips there I felt like you gave, which I think is so good. Wish I'd known some of that, years ago, right? But even your tips, your thoughts on the market right now, I think is very helpful. It's kind of what everybody's asking, wanting to know, especially from somebody like yourself that's been in the business as long as you have and has the level of experience that you have as well. And so just grateful for your time and having you on the show. How can the listeners get in touch with you, but also how can they find, get a copy of your book as well?
Thanks, Whitney. I really appreciate that. So jamesnelson.com is where you can find all my content, white papers, video series. You can order the book with links to, or you can just go straight to Amazon. And the podcast is there also. You can find it on iTunes and Spotify, but the show notes are there. So I really, I built the website for, for those who want to get into real estate investing. So that's who I built it for. So I hope it's a great resource for everybody.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.